Ladies and gentlemen, welcome to the High Performance Trader. I am Joshua Salvetti, and today we are going to be breaking down how to trade, how to draw, and how to identify areas of value, right? Which basically supply and demand zones, right? End of day, pre-market high, pre-market low, right? These are areas, right, that we look to identify opportunities in the market to become consistently profitable, right? So this is my all-time favorite strategy. It's called price and volume analysis, and it has absolutely changed my life. It has changed the game for me as a trader, and also every trader that I teach supply and demand has definitely become a lot more better and more consistent, right? So before we get going, hey, listen, come check me out on Instagram, right, at High Performance Trader. I offer an extensive online course, right, on the website in the link below or above. It basically breaks down in depth, right, a very simple way to identify and trade supply and demand if you enjoy this strategy and you want to learn more. So without further ado, we are going to break right into the lesson. So over here, I have a chart of the S&P 500, right? The SPY, the ETF, right? So this is a yearly chart, right? This is a yearly graph, and we have highs, we have lows, right? And it's very all over the place, right? So the way that I want you to identify supply and demand is very simple, right? So anytime you get a sell-off or a rally, right, you draw a rectangle, right? So how do you do that? So over here at 462.07, that is the high, the all-time high of the year. Last time we were at this price sold off, right? Very violently, right? Very heavy. So right click, add drawing, right? And you draw out your rectangle, right? Bam, just like that. I like to mark them with specific colors, right? So we are going to make this red, indicating this is an area where sellers are present, right? So then as you move down, you can see right here, over here at 450.81, right? Price kind of came up and then sold off in this area as well, right? So this area, we're going to mark another red rectangle, right? So what this is, though, and what this is telling us, because anybody can make these rectangles and these areas on their chart, but if you do not understand the purpose, you are going to get this wrong. So it's very important, right, to look at the market as an auction, right? It is a market that consists of buyers and sellers, right? So every time we're looking to get in and out of the market, we either think price is going to go up, or B, think price is going to go down, right? Is in a market in balance, right? If it was a balanced market, it would be the same price at all the time, right? And it isn't. It's constantly going up and down, buyers versus sellers, right? And we get these battles, and this is where volume and volatility steps in, and this is where we look to make moves. So every single day, right, especially when I'm identifying the context of the market and the pre-market plan, this is what I'll do, right? So I'll start on a larger time frame and just work my way down, right? So now you can see here, what I'm doing is duplicating the drawing and just moving it over, right? And finding these zones or these areas of value. Why do I call them areas of value? Right? So they are areas of value because these are areas I am looking to make money. These are areas I'm looking to identify a reversal or a continuation. These are areas I'm looking for volume, right? Because once again, bringing it back to that market imbalance, right? We're looking to capture smart money stepping into the equation, right? Us as retail traders, we do not have the funds, right, or the influence to change the market price, right? We can't make the S&P 500 go up 10 cents, $10, but there are people that can, right? These are large banks, investors, market influencers who do have influence over price action, right? So us as retail need to be able to identify these areas where these big players are playing. And how we do that is based off prior price performance, right? And it's exactly what I'm doing. At 462, we sold off, right? At 449, we sold off, right? At 430, we sold off. Now, every time you sell off, right, sooner or later, you're going to be met with buyers, right? So down here at 348.11, we have demand, right? So this is an area on the chart where there's more demand for the shares, right? Which means there's more buyers for the shares, right? Up top in the supply, that means there's a higher supply of shares, meaning price is going down because more people are selling, right? That's where we get supply and demand. And just like we did in supply, we're going to do with demand. So we're going to go ahead, duplicate the drawing, and then we are going to find these areas, right, where we're looking for buyers to re-enter the scene, right? And now something that I really want to stress, right, because I've been getting a lot of questions about this, is your areas do not need to be important or perfect. It's actually important that they aren't, and let me explain why, because that's kind of a paradox, right? So if you are so concerned with your areas being perfect, you're going to miss the point. The point is, right? So support and resistance comes down to a specific dollar amount. Supply and demand is a specific area where you're looking to capture a move, right? And this is important because it's not always the exact same area or the exact same dollar. In fact, that's only rare cases, right? So as you can see here, and let's just highlight this day or this like week, price comes down into this 380 area and fluctuates, but it's usually met with buyers, indicating sellers are trying to push it through. Remember that market auction. Sellers are trying to push it down, but it's met with buyers, right? Just like we would look at this on a 1 minute, we're going to look at it on the daily, right? If this was a 1 minute graph, this would be a perfect scalp to the upside. And that's what's very cool about supply and demand. It does not matter the time frame, right? These zones are respected or they're not respected. These areas are valid or they're invalid, right? And we're going to break into that in a little bit later on what happens in an invalid zone, right? Because a lot of the time, demand will turn to supply will turn to demand, right? And it's very important to understand that and be able to identify that. So now that we've ran through basically our zones, our key areas, right, on the daily time frame, right, now we are going to break into a smaller time frame. So I'll go from the daily down to the 4 hour, right? And you can see how consistent this works. So you can see here at 419, right? We'll call it 420. Price comes down, sells off, right? And comes down to 348. Then price rips up, right? Gets retested. We got another slight supply zone here that was buyers ripped into it, and then sellers defended it. Now I use that terminology a lot, right? So let's explain it. What I mean by sellers defending a supply zone means every time buyers take price into it, it's met with selling, right? Heavy selling, right? That overpowers the buyers. So here we are, price rips into it, rejects, very heavy, right? And then another market imbalance. But you can see here, buyers rip through this supply zone, right? So once buyers then rip through this supply zone, right? Now it is invalid, done. Now we target the next area of value. And that's going to get a little different when we break down into smaller time frames. So we'll come back to that. So this last month, right, month of, we'll call it February 2023, we failed to make a higher high in the supply zone, right? A clear indicator that the market was getting weaker, right? And that's another thing with trend lines, right, for all the technical analysis players out there. So trend lines are indicators that the market, in this case, you got an upward trend. Once trend breaks, that's an indicator that buyers are weak or becoming weak, excuse me. So now that buyers are becoming weaker and sellers are becoming stronger, you then break the trend, indicating a breakout to the downside, right? Same exact concept, right? Guys, you got to remember these price and volume analysis, technical analysis, right? It's all based on the market auction. It is very important that your brain looks at these charts as a market auction. If it doesn't, you will fail. Believe me, once it took me about 3 years to start to look at this as an auction versus a video game where you just draw on it and hope it works. Now that you look at it as an auction, you can literally see buyers battling sellers constantly, or sellers battling buyers, and then you're able to capture live opportunities by being able to analyze the candlestick analysis, right? So basically, price rips into a supply zone, rejects, right? You keep getting these lower lows. You got these lower highs, lower high, and then breaks through, sells off, right? So that is very important moving forward into the understanding the market context and conditions, right? So now going into this, you're looking at this and you're going, okay, so we used to have this demand zone right here, right? Let's just draw it. This is very important. So price comes down, hits right here, right? That's demand, right? Clear indicator, that's demand. Price breaks off, comes down, breaks demand, right? And then next time it meets this zone, it is now supply. It is now resistance, right? We call this the break and retest. And this is one of my favorite and most profitable strategies, is when you break a key level of area or a key area of value, right? I don't care if it's end of day. I don't care if it's a supply zone or a demand zone. But when that zone breaks, right, you can't just disregard it. It is still an area of value where we are looking for buyers or sellers to make a move, right? So you can see here, price sold off from 413, broke this demand zone, came up, retested this 413 area, or I'm sorry, this 407 area, rips into it, is met with sellers, and sells off, right? Perfect, perfect example of what we call a break and retest, right? So now we have a break, right? And let's dive in a little further, right? So what we're doing is identifying supply and demand zones, right? So over here we have a demand zone, right? You call it like that. And basically, remember, all what I'm doing is drawing rectangles where I'm expecting buyers to come in. And I'm doing that based on prior price performance, right? So real quick, let me just get my pre-market data back up in here. It makes it a little easier. Okay, so every time price comes into this domain, right, I'm looking for buyers, right? Because they stepped up over here at 393.79. So buyers stepped up right here, right? And you could even call this a supply zone, right? So these happen no matter what the time frame, large, small, doesn't matter. Supply and demand is the only thing that can structure the market, right? It's the only thing that's gonna, move the market is supply and demand, right? So, and basically, remember, sellers versus buyers. So buyers stepped up here at 393.79, right? Price comes down, and buyers try to show up right here, right? You can see these candlesticks, right? Comes down, retest, but sellers kept pushing, and then buyers came through, moving the price up much higher, right? And you can see price rips right into the supply zone and rejects, right? So this is really important, right? Because then price comes down, breaks this demand zone, right? Breaks this demand zone. And remember, once a demand zone breaks, it then turns to supply. Support then turns to resistance, right? So as price falls off, right, and sells off pre-market, comes up, retests this area, gets met with selling, right? That seller shows back up with strength, taking the market down, right? So basically, in a nutshell, the way I identify supply and demand in the overall market context, right, is I start on a larger time frame, right, and move my way down, right? And now we're going to break into the 15-minute to really understand this a little bit more. So pre-market high and pre-market low are very important areas of value every single day. And now I want you to think about it, right? So pre-market high is basically high. It's the highest price during pre-market because it sells off, right? So for a price to be the highest point, it means there's much lower points, indicating this was the highest price that buyers could bring the price to, right? And it tends to happen in pre-market. That's what we call pre-market high, right? And that is why it is a supply zone. So let's just make that supply real quick. Now, pre-market low is the same exact thing. Pre-market low is demand, right? So you can see here we have pre-market high, pre-market low. Now remember, on a larger time frame, this resistance level used to be a demand zone, but we broke through it. So now that's also supply, right? That means there's a big seller there, hence where the seller came from, pre-market, right? So now as price comes down to pre-market low, right? Let's break this down into a little bit stronger. Price comes down into pre-market low, right? And you're met with buyers. right? Almost done it, right? Sellers came through, but buyers showed up, saved price, right? Now, realize here, right? So we got pre-market high, we got pre-market low. Buyers come in at pre-market low, bring the price all the way up to pre-market high, right? Because remember, we're identifying smart money. And if smart money is stepping in at pre-market high, right, that means they're going to let price come all the way up there. Smart money likes this specific area. They like this zone, right? They like this 393.54, right? This is where they want to sell their billions of shares, right? And to sell all those shares, they must have the liquidity for it, right? So price, they must let buyers push price all the way up there, creating all that liquidity, all those market orders, so then bam, they can sell off with strength, with volume, right? So this is what moves the market, right? Buyers versus sellers, smart money versus retail. Now, our job as retail traders is to be able to identify where these areas of value are so that we can understand, right, the opportunities in front of our faces. This is how we get into the market. This is how we make money, right? Supply and demand is the only thing that moves the market. This is what I use daily, right? It's super important, super valuable, right? And I will consistently trade supply and demand till I die, right? So if you like this video, give it a thumbs up, subscribe. If you want to learn more about supply and demand and areas of value like end of day, pre-market high, right? I have an online course where I dive in and break this down extensively, right? To the T. It's very valuable, right? So get involved. If you want to get involved in the Discord, we call out trades every single day. And not only that, we teach each other and hold each other accountable so that we could be the absolute best traders that we can be, right? So I'm Joshua Salvetti. Thanks for tuning in, and I will see you in the next